Welcome to the Fintech Combine. I am your host, Kris Kovacs, and this is the series where we talk with and sometimes about community-based institutions, their digital and business transformation projects, and we meet the innovators, entrepreneurs, and fintechs that make it all possible. On this episode, we're speaking with Omar Jordan, the founder and CEO of Coviance. Coviance was here 18 months ago. Yeah. Right? And you told us a little bit about the company then. We're super excited to hear about what he's been doing for the last 18 months and how they're bringing great services to credit unions. So if you're ready, let's suit up and get out on the field. So, Omar, welcome back. We're excited to have you. Tell me a little bit about what you guys have been doing. First, let's introduce Coviance to anybody who doesn't know what you do. Yeah. Let's talk about yourself and a little bit about your background.
Well, I'm just a crazy entrepreneur who likes to break stuff apart and put them back together. I like a challenge, and I'm fortunate to have a great team that's excited about what we're working on, and most of them are as crazy as I am, and that really helps. Mm-hmm. You still got to have the MBAs around to keep us in check, but outside of that, this is what's fun about fintech.
This is what's fun about fintech.
Absolutely, and what we do is we focus on bringing credit unions a fintech experience when it comes to interacting with their members, and as well as community banks. When it comes to interacting with their borrowers, when it comes to home equity and HELOC lending, home equity lines of credit.
Yep.
And so that's been a focus for us for quite some time. We're about 450 community banks and credit union customers.
Really great.
Nationwide. 75 employees and growing, and just love what we do. Very passionate about continuing to provide value for our customers and their members as well.
So you talked a little bit last time about kind of where your inspiration came from for this solution. Give us a little bit taste of that. What was it? I know your background. How did that lead to you saying there's got to be a better way of delivering an improved experience?
That's a funny story, and I talk about it all the time. I walked into a credit union, and at that point I owned rental properties, so I was very familiar with the mortgage and home equity lending process. I walk in there, and it wasn't that long ago. It was within the last decade, and I was handed a piece of paper, and they said to me, "Fill this out and fax it to us." That's my mortgage application. Fax it to us. I said, "Fax it to you? That's still a thing?" I don't have a fax machine where I live. She goes, "Where do you live?" I said, 2015. What do you mean, fax it to me? So that was wait a minute, there's got to be a better way. So not only that, but most borrowers nowadays, we've got digital online applications that we fill out. Right. But then once you click that submit button, it's like it goes into the dark web. No one knows what happens with your loan.
What's the status? What is it?
Yeah. We'll call you in 5 days. Why do you need 5 days to call me? Right. So that was I got to fix this thing moment, right? And I knew I downloaded the CFPB guide, Regulation Z, and I read the whole thing, 190 pages, end to end, and nowhere on there does it say mortgage needs to take 30 days or home equity loan. Nowhere. So let's cut the BS and let's make a decision to fix this problem. And we've been doing that, and we're grateful to have credit unions that are actually saying the same thing, and that's what inspired us.
And you approach the problem from the perspective of not let's go build an LOS system, right? You said let's make the actual process of collecting the information and decisioning, getting the information necessary to decision one.
The biggest misconception in this entire industry when it comes to lending is most credit unions, most executives at credit unions, most VP level, they think the problem is the technology, the problem is the LOS. And when you start to just unveil or peel the onion layers, you'll start to discover that the problem isn't your LOS. We have a joke going around that says everybody's best LOS is their next LOS, because that's what they keep doing.
That's what they think.
Every 2 to 3 years.
That's what they think.
But when you start to peel the onion, it's your processes. It's your 1970 mortgage underwriting processes that you've now adopted as policy.
Right.
And when we get engaged with a credit union or a community bank who really wants to get serious about home equity lending and given that consumer lending experience to a mortgage type product, it gets really fun when we start to challenge some of the policy decisions they have.
Right.
And we help guide them through the process of changing it, working with their board, working with compliance folks, providing the data, the evidence, anything we need to make sure they get establish a great foundation before we start to put technology layers on top. And that's exactly what we do.
So how do you take that idea and grow it to be something like you have? 429, you said? That's amazing.
Thank you. And, I can't take credit for all of it, of course. Maybe the first 25 customers was a lot of hard work of me smiling and dialing, but then you bring on a team to do it.
Yeah.
I think the product speaks for itself. Mm-hmm. And what I love about this industry is your customers starts to talk about the product.
Yeah, one of the values of working within credit unions is that word of mouth.
Absolutely. I mean, we're putting something out there that most people, we created a problem most people don't know they had, and we're solving that problem. Mm-hmm. And so it's somewhat challenging for some credit unions and community banks for us to go in and say, look, you have a problem, and most of them don't think they have a problem.
Right.
We're just brainwashed to believe that a home equity loan or a HELOC should take 30 days.
Right.
Because that's all we know.
Right.
But, and it's, in some cases, we actually are challenged on, we don't believe you. There's no way in 72 hours you can clear to close a loan. So it's telling the story, providing case studies, and so on.
Right. Right. So how many potential customers in that first meeting come to you and say, we've seen what Rocket can do. Yeah. We want to do something similar on the home equity side. Does that prerequisite, or is that what opens their eyes sometimes, is they see somebody else do something? Maybe he's not full of bullshit. Maybe this is really possible. This can be done.
The rocket of the home equity and HELOC lending industry now is a company called Figure.
Okay.
Figure.com was founded by the founders of SoFi. Very intelligent people. They've got the right vision. They've really focused on that member experience. Mm-hmm. So credit unions have gotten to a level where they've stopped originating and they buy loans from Figure. And to us, we tell the story of you can provide your members that fintech experience if you make the decision to do so.
Right.
It's not your LOS.
Right.
It doesn't have to be Coviance.
Right.
It starts with you making the decision that we want to provide our members with their best fintech-like experience. And then from there, we can start to work. And it starts at the top, Kris.
Okay, I was going to say, what do you think holds some people back from making that decision?
The C-suite, specifically from the CEO, is not driving that behavior and setting expectations, then what's the incentive for the VP of lending or the CLO to change anything?
Right.
And so what is growth if you're not providing new members that ultimate experience that they can't experience anywhere else? So how do you expect to grow? What's your differentiator?
You have made very good mention that it isn't just you, it's the team.
Absolutely.
Tell me about your team.
I've got a wonderful team, and it takes years to build a team, and it takes years to build trust within a team. That's another thing I learned, especially on the executive leadership side. So I've learned a lot. I've made a lot of mistakes growing a company from nothing, from me to now 75 employees. Yep. And I think what most founders have to realize is I think I timed it. It's about 3 years for folks to start to trust each other and understand that you have their back. Right. But again, it starts at the leadership, right? And so if I know a lot of founders that potentially like to have a meeting here, go around, change what they decided, and have another meeting with another C-suite. Right. Don't worry, it confuses that issue. Right. For us, one of the big things that we do as an executive leadership at Coviance is every Friday, it's mandatory for 2 hours, we all meet, the executive leadership. So CEO, COO, CRO, and CFO. Yep. And we get together, we talk about the business, what are we working on, how is this moving, what's the impact, things upcoming. Right. So that helps keep us in check and challenge one another on what things we're working on. So communication is key. But then again, just trust is a big factor, and transparency is another one too.
How do you create transparency with your staff?
I'm very transparent, and it's almost a problem. You ask a question, you're gonna get the
get the real answer, unvarnished.
Yes, absolutely. So I think that's a personality thing, and even our financials to our staff, they know exactly where we're at, how much cash we have in the bank, and it's just I've always lived by that code, because they can smell BS if you're trying to swim around it. And so if you're setting the objective, here's where we are financially, this is how much cash we have, hey, it's a problem if we don't meet these objectives, then they get hungry and they want to meet the objectives because they want us still to continue to work here, and they want to continue to see the company succeed, and they have stock in the company, and they have options in the company, I should say. And so the more we grow, promotions happen, raises take place, and so on. So if you think your team is not invested and you're dismissing the fact that they're there to support you and support the vision of the company, you're making a mistake, especially if you're hiring people that are, salaried, even hourly employees. They want to get excited. This generation that's coming behind us, they're mission driven.
Do you share the credit union story and community banks, like not just credit unions, but community banks as well, like the impact those organizations have on the communities they serve?
So quarterly we have meetings with the whole company. So we're 100% remote, but every quarter we all get together and we talk about these stories. We onboarded this credit unions, we've impacted this many members, they've originated this many loans. Before Coviance, they did this many loans in that amount of time. With Coviance, we saved the credit union that much money. We brought in the members that much loan faster. So the impact of what we do goes beyond what we receive in revenue. It's the impact that we provide our community, and that's partly why I love the industry too. I mean, it's community banks, community credit unions. We're here to help each other out.
That you have been a very successful entrepreneur. You have we're here at Venture Tech, which is super interesting. Lots of cool new fintechs going around. Lots of fintechs coming up to you and asking you for advice about how to do this and who should I talk to. What do you tell them?
It's a grind. Don't give up. And I'm obviously happy to mentor as much as I can. That's the big thing for us. If I can get excited about the founder, I'm happy to get involved, introduce them to you, introduce them to other to my friends. But it's certainly we're climbing a mountain every day, and every mountain comes with different challenges. I remember my first $1 million revenue point, right? That's a whole nother hustle, and then your next objective is $5 million. That's a whole nother layer. And then you got to think about, do I have the $5 million team around me? And then after 5, you got to reach the $10 million market, right? And do I have the $10 million team? So as a founder, as a CEO, you have to also self-assess. Am I the right founder for the $10 million, $5 million, or $50 million company, right? And what do I need to do to be there, right? I owe that to my team, and we've gotten to a level where, I get, like I said, 75 employees, and my chief revenue officer, I go, hey, do you need help with this? He goes, no, we got it. Thank you. You go do over there. You go do your thing. We got there.
New founder things.
Yeah, so it's great. And then I have to be humble enough to understand that that's not an insult. Because I used to be involved in everything. The product, the sales process, everything. But now I know I've got professionals that are paid well, that know this stuff better than I do. And now I go to my marketing team and my sales team and I go, hey, how do I talk about this product? What do you guys do? Tell me. So that's the fun part. As you get to 75 employee plus and scale the business, it becomes less pressure on you and more pressure on the team. But it's kind of spread out, and we're all in it together.
So catch us up. When you were here last time, it was Q1 of 2024, right? It's been a year and a half since then. What's happened in the last year and a half?
Oh man, it's been a fun journey. The last year and a half have been wonderful for us at Coviance. So more customers obviously came on board, and home equity has been a very, very hot topic for a lot of credit unions and community banks. When interest rates go up, a lot of refinance and purchase money transactions don't take place, so home equity is on the rise. Credit card debt is on the rise. Student loan debt is on the rise, and we know what's happening with that, with the administration changes. So the consumer is the one that ultimately feels the impact. And so we're seeing a lot of credit unions and community banks step up and help their members to provide them solutions like home equity lending. And so the volume that we're seeing on a national scale is massive. And I'd like to see, and we have been seeing credit unions finally say, we should get behind home equity lending.
Okay.
So things are going well for Coviance. I'm seeing a lot of traction in the industry. I think credit unions can do more in terms of adopting technology and just believing in their ability to provide services that members need, fintech-like services.
Yeah.
And it's exciting to be at Venture Tech and see a lot of these fintechs come on. And so I'm seeing a lot of movement with the industry. It's a little slower than I like, but what are you going to
do? You remember being a baby fintech?
I do. I do.
You had some particular suits you wear.
Whatever it took to get attention, I did. It was desperation to the max right there.
Indeed. One of the things I like about you, and I think you are one of the very best at nurturing relationships, right? You do things on purpose just to generate, create, and maintain relationships.
Oh, absolutely.
Right?
Yeah.
Notes. I have in my office at home the picture you sent me of Ali, right, standing over Frazier, right? Because it says, hey, we're going to go get him. Like, we're going to go do this thing. You know what I mean? Who taught you that?
I don't know. It's old school, I think, or watching old sales movies, Glengarry, Glen Ross, or whatever it was. I just think that human touch is so much more impactful than an email. Especially when you meet somebody and that you felt that made an impact or that helped you out, like you have, and others, they just write a little note. It goes a long way. Versus sending an email or a text.
Right.
And they keep that on their desk for if it means anything to them.
That's right.
Or send a bottle of wine with a note or whatever it takes. So you get to know the people you're working with and make sure they remember you. And you never know when you need a friend. I think that's the most important part.
Wise words.
Absolutely.
What do you wish, when you started, you knew that you know today? So when you were wearing the funny, right, at Nacuso, right. What did that guy not know that you know today?
Man, I would have. Oh, there's so much, right? I made so many mistakes. I don't know that I'll ever do it any differently.
Interesting.
As many mistakes
Expound on that a little bit.
In terms of how I was able to raise funding, and and there are founders out there that go that become addicted to raising money, right?
Oh wow!
And they just keep raising money, and they continue to get diluted, and next thing you know, they own less than 5% of their company, for example.
Yeah.
Not your typical CUSO, started by credit unions, but true founders who own 100% of their company.
Yeah.
And they just keep raising money and raising money and raising money. And for me, at some point as a founder, what are you working for? And if I know anything about entrepreneurs, and we have ADHD, and we get bored pretty quickly. And so I've got to be chasing something consistently. And I think for me to just go get a job is not exciting enough. So I don't think that I would have done any differently. We've always been extremely careful how we deploy capital, very strategic in it. We hired strategically, we spend strategically, but I don't know that I would do it differently, man. It's such a crazy thing. I would invest in hair products, I lost a lot of that.
Like, do you think those red lights work? They can't possibly work, right? Like, otherwise people would just have red lights on their head. You know what I mean? Like, that's always make me laugh.
Yeah, I know. Who has the time?
I think it's easier. It's faster, right? Just to shave it and go.
Yeah. On the flip side of that, there's founders who raise hundreds of millions of dollars and they have multi-billion-dollar companies. So I don't know.
Yeah. Okay.
It's such a hard thing to do. And right time, right market, things are different.
Yeah.
We went through that 2023 dip and
when everything turned around, it went from growth to profit like that.
Yeah. Oh yeah. Absolutely.
Right?
So it's hard to say. We do what we can with the information we have as founders, and I think just kind of be methodical. Don't react too fast. Have the right team around you. Listen to everybody.
And let me build on team, because one of the things you've also done is you've been very methodical about building your advisory group.
Oh, 100%.
Right. Finding the right people who represent a variety of folks across.
I love my board structure and my advisory structure as well. They're not all just credit union people, but they're credit union people with different profession or backgrounds.
Right.
So I have an entrepreneur on my board. I've got a inspiring motivational speaker who was at one of the largest QSOs at the Paxton.
Yep.
You were a phenomenal advisor when it comes to technology and platform. And it's just been a wonderful journey of having the right team.
Yeah.
And again, they care about you.
Yeah.
Everybody cares
Yeah.
and wants to see you succeed as a founder.
Yeah.
Be transparent.
Yeah.
Tell everybody what your problems are, what your goals are, and everybody wants to help.
What's the best advice you ever got?
That's funny. Don't negotiate your own deal. That's, when you're
What does that mean?
don't negotiate. When you're raising money or looking for a potential M&A opportunity. I knew an entrepreneur who sold his company for a lot of money, and he said, I didn't negotiate my own deal, and that's my advice to you: is don't negotiate your own deal.
Let somebody else
do it, because it becomes emotional.
Yeah. You're this is your base.
Yeah. And I feel
you poured all that effort in.
100%. And I feel like that's why my CRO doesn't allow me on sales calls, because I'm just an emotional founder. We're emotional, people. We're very sensitive by nature.
Yeah.
And we just want to make everybody happy,
right,
and make deals. And so we tend to leave a lot of money on the table sometimes as a founder.
Interesting.
Yeah.
Don't leave money on the table. Have somebody else negotiate the deal.
Yeah.
Awesome. If somebody wants to find out more about Coviance, how do they find out more?
Reach out to me. I'm on LinkedIn. Please follow me. Love to share with you.
You're all over LinkedIn.
Yeah.
Yeah.
It's an addiction.
You're a celebrity.
I'm a celebrity.
Awesome. Listen, I really thank Omar for joining us today. He's a fantastic entrepreneur. Please follow him. Reach out to Coviance. They are building great products, and he does it the right way. And it's not always easy. No. Right? It's not always easy, but you do it the right way. So if you like this content, please like and subscribe on your platform of choice. Thank you very much. We will see you next time.